Hi, I'm Nick, the chairman of CGRA, CGrowthCapital. So I know you haven't heard much from me about this particular business. I'm involved with several businesses globally, and really where my strength lies is building out capable teams who are able to deliver on goals, predefined goals, and milestones that we need to deliver. So I want to talk to you a little bit about CGRA today. There probably hasn't been enough news and coverage to the market about exactly what this business is developing itself into. Dan and Mitch have been working phenomenally behind the scenes to build out the team, build out the infrastructure, which is software for reporting, kind of everything that's required behind the front of the company that you guys see. And I think it's something that sort of was misconstrued, when we took over this business. Yes, this business had, a whole bunch of assets, but I think what was not clear to shareholders at the time was they're underperforming assets. I'm not, those of you that follow me in the other businesses will know how I operate and what my driver is. We really aim forward for building strong fundamental businesses that build strong balance sheets, strong revenues, growth potential, and are globally scalable. I'm not interested in business for hobby. It's, I do business, I love business, but I do it for growth. We want to grow these businesses globally. If we can't grow them globally, I'm not interested. We kind of move on to the next project. So we only really enter into something that we know we've got the ability to scale, and that is in a market segment that has real potential. So, when we took over CGRA, there was a whole bunch of assets in there which were underperforming, ultimately just costing the shareholders money and likely to continue to cost the shareholders money for upkeep of licenses and rights and whatever else. And fundamentally, we're not delivering. We're not delivering the results, and that's not something that really a space that we want to be in. And therefore, we offloaded those assets, to the old outgoing seller of the business, with all the debts, liabilities, and continual responsibilities that those assets had, which I'm very sure and very confidently can say would not have delivered much value to you guys long term. Perhaps in the past they would have, but in the short, medium term, I don't see it. And really, where we're driving this business now, it's really categorized as investing in undervalued assets. So we're a little bit sector agnostic. That won't continue forever. Once we've found these predefined routes, then we will start to bring in more and more assets and consolidate assets around those particular target markets. So, as you've found, we've created two subsidiaries, one being mining and one being sports. And I know they're fundamentally different and are actually not particularly synergetic, which is unlike my normal business style, where I usually like to put businesses that are quite synergetic and we can cross-pollinate both infrastructure, costs, management, sales ability, and growth. But both of these are huge opportunities that I feel have got the growth potential we need, and the growth potential we can deliver on, and equally importantly, have got the skills and capability to deliver on that potential. So I'm going to talk you through a little bit about each of those individual subsidiaries at a very high level today, and I intend to, over the next week or two, go into much more detailed explanations on each of those businesses and the exact roadmaps. And I know Mitch will come to you and give you a little bit more insight particularly into the sports side of it. But certainly I'm going to come to you in the next couple of weeks with something much more detailed on each and every business and how I see those extrapolating out. But certainly from today, I'm going to give you a little bit of a high level on each of those to give you a little bit more comfort on what's going on and that there is a strategy behind the scene, and there is a plan. So CGRA has acquired Savage Barbell, which operates out of California, which is really a sports apparel brand, but it's particularly aimed around functional fitness. So sports basically, or gym or fitness programs similar to those of CrossFit, F45, those type of brands of products, a product of gyms programs, and essentially they have developed a really exceptional range of high performance apparel. So what we've seen since COVID times is that the markets have changed considerably. People's dresses have changed considerably. People's lifestyles and habits have changed. People are no longer going into the office every day. It's now become normal for people to wear basically gym, fitness, or lifestyle gear more or less every day of the week because they're no longer going into an office. And therefore this whole apparel market has kind of opened up to phenomenal global growth. Now that said, let's say the middle level of the market, although it's huge volume, is very low margin. And very low margin really is heavily dependent and eats on cash flow, which is not the market that we want to be in. So we kind of got to try and keep this business, and we want to now scale this business globally. So already Savage has sold their products, I don't know, to probably 40, 50 countries around the world on a small scale, really through a limited marketing budget, limited distribution channels, and have built a really nice, profitable little business. However, it now needs to be scaled up. So I don't think in most of those competitive functional fitness circuits around the world, people know their brand, they've seen the brand, they know the Savage brand. So now we need to give them access to it. So at the moment, the team are busy building out the product range to launch some new products, as well as expand the current products into external markets. So that being the Middle East, UK, and South Africa. So South Africa will cover into the African market, Dubai will cover into the Middle Eastern market, and UK will cover most of Europe. So we're busy in the process of setting up those distribution centers and putting in the new product range, which we aim to launch in Q4. And Mitch and the team have been doing very well doing presentations to some of the upper end retailers, which the feedback has been very, very strong. And we are pretty close to signing our first contract with one of the global retailers, but certainly very strong in Europe, if not the strongest in Europe, really to put our brand of product in there. Now, although we want to take it a little bit more mainstream, it's a little bit of a fine line between going too mainstream and competing with the Under Armours of the world. That's not our intention. We certainly do not want to be competing with Nike and Under Armour and Adidas and any of these other brands who have got leagues and leagues of time, money, and market potential ahead, or market capacity ahead of them, versus us. Who we need to remain ourselves quite a bit more niche, but competitive in that space. In terms of being quite niche, there's actually limited competition around the world. People are either super niche, i.e. just do boxing or just do athletics, or they're very widespread. That sort of seems to be the way the market is segmented. So us coming with quite a niche offering, but to a wide range of sports, we feel we've got quite a USP there, and certainly our product technology and product development is exceptionally strong. So now with the routes to market and the marketing and the branding, those of you that don't know Mitch, the CEO of CGRA, he's come from a professional sports background, albeit rugby, probably a sport that most Americans are familiar with. He's come from a professional sports background and very, very well plugged in to the sports circuit globally and to the international sports and international sports influencers. So I'm very comfortable in that model. The product range is great, and I think by into Q4 we'll start to see some real traction and some real growth. It's a puppy of a business at the moment. So doubling, quadrupling, tenfolding the revenue is not going to be a difficult task through the course of next year. It's a very, very, very scalable business. I'd really like to see this business go to 10 to 20 million revenue organically within the next 12 months. Organically on the current product range, and then we'll be looking for opportunities to acquire into their products, so specialist niche opportunities, whether it would be a boxing range or whether it be athletics or gymnastics or whatever specific niche ranges, and we'll keep bolting those on to build that Savage range out. We've got some targets identified. Mitch has had a number of meetings. We've done due diligence on quite a few. I think we're in a different time at the moment globally. The markets are not in great shape. People are starting to feel, the pressure of the interest rate increases, and their disposable income is starting to reduce quite substantially. The increased oil price, gas, etc. at the tanks, the inflation cost has hurt people considerably. So I think we need to be careful. We don't want to overextend at a period where the market is squeezed and the consumer is squeezed. However, there's still plenty of money out there. People are still consuming on a daily basis. Hence why inflation rates have not slowed, as much as they would have hoped by now. And that said, our product, as I said earlier, is quite a niche range, quite a niche market sector. So, we don't see, people don't necessarily stop the exercise. They may stop splashing out on 3 extra sets of trainers that they didn't need, but they're not going to stop buying the core functional stuff that they need. And that is the basis and the philosophy of Savage Barbell. It's functional fitness equipment or gear. So I think let's watch this space as it develops. And primarily CGRA Sports as a holding parent. We really are wanting to bring in some sports technology business. We've struggled to find the right opportunities yet. We've looked at 10, 20 opportunities. None of them have been right for us yet. the one we had our eyes on, and really was put down for it's kind of to be the backbone or the catalyst of this acquisition of the CGRA sports business, is really was a technology business around fast moving foods and goods, mainly in the sports space, sports stadiums, sports arenas, concerts, music concerts, etc. And it was an IoT based platform, really, really intelligent. I'm not going to go into too much detail because the deal is still on the table. It's certainly not dead. We basically just stumbled at the last block of due diligence where we weren't particularly comfortable with the valuations, but we believe in the end we will reach a valuation that everybody's comfortable with. So, certainly watch that space. I don't know if it's going to be, in the next imminent few months, but I'm pretty sure by some point next year we would have accumulated that business into our group, which I think you'll really like. It's a really exciting business. So anyway, as I say, we're looking for technology opportunities. So if anybody comes across any sports tech businesses, please feel free to send us the opportunities. We're certainly hunting them out, and whether that's AI based or whether it's physical, garments, equipment, training, software, analysis, you name it. We've got an open mind in that sports technology field. So, we very much hope that we'll be able to grow this business, over the next, let's say 24, 36 months to, a 30, 40, $50 million business, certainly with the back of acquisitions. So if we can grow this to a 10 or 20 million next year, relatively organically, and then start to bolt on some acquisitions, that should be relatively accomplishable. So, and certainly with the retail opportunities that we are, finalizing now, I think the sports business should develop really, really, really well. So anyway, that's on the sports business. I'll go on now and talk a little bit about the mining business. So to talk about CGRA mining, and particularly our Nkoli Hambola site, for those of you that aren't aware, Tanzania is probably one of the richest mining countries or mineral reserve countries in the world, and particularly around lithium, but it has a whole wide range of minerals. Now, you wonder why this has not been mined historically. So in around about 2017-ish, the ex-president or late president had bought in some interesting mining regulations, which caused a mass exodus basically of pretty much every international mining company. And those sites have basically just been left dormant, a lot of them undeveloped, completely unexplored, with massive reserves. Now, Africa is not for the faint-hearted when it comes to doing business. The levels of, political awareness, corruption, just the simplicity of physically moving money from A to B through the banking systems or lack of banking systems. It's a pretty challenging place to do business. However, I'm sure those of you in business yourselves will know, where something is challenging is where the opportunities are. If it's a really smooth ride and it's really simple, you're going to find low margins and you're going to find a bunch of competition. When you go into these sort of a little bit more challenging, difficult situations or difficult places, that's where there's money to be made, bigger margins, less competition, much more, freedom to do business. So anyway, cutting to the point, that president passed away. There's a new president in place who's extremely pro-mining and is now actively going around the world seeking to try and get mining companies back into the country, to explore all these opportunities, create jobs, and basically put Tanzania back on the map. And if you have a look, just do a little bit of Google research, you'll find that East Africa has been developing considerably over the last 20 years, Kenya in particular, and now that's obviously moving down into Tanzania, however you would like to pronounce it. Now, those of you that don't know me, I'm originally from South Africa, so I have a pretty good understanding and a pretty strong network through Africa, both people on the ground as well as politically. Therefore, this project is not a scary project for me at all. We have really, really strong people in that space, really strong people in the country, and we believe we're able to make the most of this incredible opportunity for shareholders. So really, what we've got is we've acquired the rights to a whole bunch of tenements. It's around 400 square kilometers, which is about 150 square miles, 153 square miles, give or take. Now, this is made up of numerous small little mining licenses or small little plots. I'm talking really simple terms for those of you that don't know mining. Simple little plots which are approved for mining, probably have minerals on them because they're in a mineral belt. If you found minerals on the left and you find minerals on the right, you can kind of assume that there's probably, and the belt runs right through that, you could assume that there's probably a good chance that there'll be minerals in the middle of it. That's really the simplicity of it. Obviously, you now take it down to the next level of actually exploring and defining. Now, the belt basically runs right through our 400 square kilometers. On all sides of us, they've found ridiculously strong reserves, some of the strongest and highest concentrate reserves in the world, and are now aggressively going after the physical licenses to actually start mining. Now, we've acquired the rights to that, and where we are currently is basically consolidating all of those. So I think there's about 53 from memory, 53 individual plots or allotments or mining areas, which we have to consolidate into one single license before we actually start mining. Now, that doesn't stop us doing the exploration, which is going on in the background. So the entire site has now been pegged, and the detailed reporting is underway, and simultaneously we've got samples on its way to a lithium processing plant manufacturer to basically actually start to sample our physical rock and ore type to build a plant out for us. We've actually provisionally arranged a funder who's willing to finance the plant on some type of a revenue share basis. The plants cost roughly about $3-4 million. Might be up to $5 million if we go for a slightly bigger one. And it's basically a series of flotation tanks, crushers, density separators, and flotation tanks. It's quite a substantial plant. We're not talking about a little mobile mining rig on a I don't know, some type of little plot in Alaska. This is a serious operation that's got hundreds and hundreds of millions of dollars worth of revenue potential. So at the moment, we've pegged the site. We've sent samples on the way to the mining processing equipment guys, so they'll actually run samples through their physical machines to basically define what's the correct machinery that we need, and then we'll be placing the order for the machinery so long. We're 100% sure we've got plenty lithium on site. We're 100% sure. It's just where exactly is the best places to start the mining. So, and we know that because they're already taking lithium from our site. The Chinese guys and artisanal miners are already bagging lithium from our site into bags, and there's a truck that comes every week and is taking it. Now, we're obviously stopping that with heavy security and fencing the site, etc., but that's been going on for the last years. So, on that basis, we know there's plenty lithium there. Our own internal samples have also shown plenty lithium there. So, we're not concerned about the lithium. We're concerned about which areas do we start, where's the best strategic areas to start the mining in terms of the softest rock, the best water drainage, etc., the best access. It takes a lot of planning. Building a substantially sized mine is not a simple process. And we're busy in the process of bringing in experts to do that. We have some experts on our payroll already, but we're busy in the process of hiring and bringing in more. So back to where we are, we've pegged the site, we've sent the samples to the processing plants, processing equipment manufacturer, and we're starting the detailed exploration surveys, which will take roughly about 6 weeks-ish. Now, once that survey is done, then we'll get the detailed report and kind of the drill samples, etc., which is obviously the part that will really excite you guys, and allow us to actually quantify what the real potential is of the site going forward. Now, why are we comfortable investing into a processing plant on ourselves anyway? There is no real processing plant anywhere in that valley. So those of you that have done a little bit of following on our report that we've submitted so far to you, the Hombola region within Dodoma is a huge region. I mean, it's thousands of kilometers, or hundreds and hundreds and hundreds of kilometers or miles, with several mining tenements or mining companies operating in the area or beginning to operate in the area. And in the meantime, people are extracting lithium ore, putting it into trucks and shipping it off through Dar es Salaam to China as raw ore. There's no processing plant there. So we intend to build a processing plant, and while we are starting to establish our own mining facility, we'll start to process everybody else's ore from all the other surrounding sites, which will allow us to generate revenue far quicker and allow us to basically become a dominant force in that region. Now, we're very comfortable with the process, we're comfortable with the people, we're comfortable with the government. The government are very, very supportive. It's a matter of just going through the process. Those of you that are not familiar with mining, it is just the process. You can't cut corners, you can't shortcut, because it comes back to haunt you later. And we're reliant on all these different experts to do their jobs, to do the surveys, to do the reports, to develop the processing equipment, or consult us what is the correct processing equipment we need. Meanwhile the team are flat out building out that plan and that business model and the people around it and kind of all the plan and the funding that we need to go to the next stage. We're sufficiently funded for this particular part and probably to acquire the processing equipment, but then to take this thing onto a several $100 million mine is a whole nother level. Now, that said, going forward with this, the OTC is obviously not the right space for mining companies, as probably a lot of you will know. Mining companies generally are not really understood in the OTC markets. Mining has a slightly different investment sort of outset and different way of going about analyzing mining, which OTC, as I've said on numerous of my podcasts and the other businesses, OTC is a great stepping stone. It's a phenomenal stepping stone to get businesses onto the map, get them going, that initial seed capital, kind of get them over the start line, start to build a little bit of scale, and start to get a reputation and get known. But then to really grow up into a big business, which is all I'm really interested in, we need to be on a big board. So we would probably, we're scoping out at the moment whether we would put spin the mining subsidiary out onto probably the ASX in Australia, which is a very, very, very strong mining market, potentially Canada, the AIM market in London. So we're exploring a few different opportunities. It's not for now, it's certainly not for 2023, but I would say almost certainly for at some point during 2024. Once we've got all the exploration reports, we've got all the licenses consolidated, we're kind of starting to generate some revenue, we've got a processing plant in place, then certainly we would look to spin the mining subsidiary out onto a bigger board with much more established investments in the mining space, and really allow this business to go on to the next level. So I think we've got a pretty clear roadmap on that, and obviously those of you that are familiar, in the ILIS and the QIND businesses, which are obviously listed on OTC, QIND is about to go up to NYSE in the coming weeks / month or two. On that model, effectively what happens is in a spin-out scenarios, when we spin the mining company out up to a big board, all the shareholders in the parent company in CGRA, CGrowthCapital, basically usually get dividend out shares into the uplisting company. So you end up with a double play. You basically end up with free shares, if you want to call it that. We're a long way from that, so I'm not even going to really go into that today. That's totally not the point. We still way too early to get into talking about that. But kind of what I want to show you today is really that we focused on building out real, proper, tangible businesses that have serious value, serious deliverables, and we can actually hang our hat on the results that are coming out of there, and naturally the share price eventually will start to follow. The OTC market obviously at the moment is a little bit of an interesting place in terms of the share prices. Things are moving that shouldn't move, things that should move are not moving. It's a bit of an interesting place, as I say, but we're very comfortable in the model that we've got within CGRA. Both the sports businesses starting to deliver really, really well, start to grow its revenue, start to grow the profitability, and the mining is obviously a scale off the charts in terms of growth. And we're obviously keeping our eyes open for any other opportunities. We're searching on a daily basis for other opportunities that we may be able to bring into the group. Our criteria is relatively straightforward. We need to be able to add value, we need to be able to finance it, and ideally we need to be able to try and cross-pollinate it with other businesses in the group or businesses that I'm involved with, where we know we can add serious value. It's not just about buying a business and being able to run it better than the last guy. It's about being able to add value and scale it. We don't want to have a 1 + 1 = 2. We kind of want to go 1 + 1 = 4 or 5. That's sort of where we want to try and go. If we can't scale a business rapidly in 12, 24 months, it's not the right sector for us. So that's sort of our key indicator before we enter into a business or enter into a sector. It has to be scalable. And as I've said to most of the shareholders in all our other businesses, it's really, really important, that people are making investment decisions for the businesses that they're investing in, not for the ticker that might pump today or tomorrow. Because in the end, you're going to end up losing if that's your investment strategy in the short term. Good, strong, fundamental businesses will still be here at the end of a recession, and they'll still be growing, and probably growing a little bit quicker because they can consolidate businesses that are weaker and struggling. So that is really the space that we aim to go into. Strong, fundamental businesses with strong balance sheets, strong management teams, great expertise, access to capital, and basically able to push through that barrier and take it to the next level. So that's enough for me today. Sorry for the long waffle. I hope it was informative to you. I hope it was interesting to you. And I'm sorry you haven't heard more from me, and you certainly haven't had enough news over the last 3-6 months. But we don't want to just put a lot of fluff in the market. Our news is really fundamental, and it's important, and it's substantial, and it's meaningful, and that's the way we like to go with this business. And I'm sure as the momentum starts to pick up more and more on both sides, the sports and the mining business, you'll start to get a much more fluid news feed, on a weekly or 2 weekly basis. We're very conscious that we need to bring you that news and bring the market the news. We're very, very conscious of that. And I promise you have my word that we will do that in the coming weeks and months going forward. So thank you all for your loyalty. Thanks for your shareholding, and all the best. Thank you.